Okay, thank you. Welcome, everybody. I'm excited to present to you Carry Connect Data Solutions today. We are a Canadian-based data center company. Probably a little different than some of the other presentations you'll see today, but it's an exciting company. It's an exciting space, and you're going to see a company that is poised for fast growth, has an experienced management team, has a great value proposition, and maybe just importantly, a very tight, well-controlled share structure for investing in. The ticker on the TSX Venture is CCDS. The WKN is A40XB1, and you'll be able to find it through a basic search. We're traded in Canada and we're traded in Frankfurt as well. And with that, we'll jump in. Standard disclaimer. And first of all, what is a data center? It's a new concept to some people, so I'm going to explain it fairly quickly. A data center is a physical location that stores computer servers, machinery, and related hardware and equipment. This is what a data center looks like as a picture. A rack is basically a steel metal frame that goes up and down like this from the ceiling to the floor, and it has a door, and inside of it is where computer equipment is kept. Its servers are kept that operate everything from the basic internet to software for companies, and very particularly and interesting these days, AI equipment. What a data center is providing to its customers is a location to put their servers, so put their computer hardware, power to those servers, the backup of power, which is really important. So if the power goes off on the normal grid, there's battery backup systems in a data center. And behind the battery backup systems, there's diesel generators that can run for days and days. So the power will always stay on to the customer's equipment. Cooling is really important. There's systems that keep the room where the servers are cool. They generate a lot of heat. So cooling is very important. And then connectivity to the internet, fiber optic connectivity. So your servers run and deliver data back and forth to your customers quickly. What a data center or a co-location data center, as they're called, like ours, do not do is we don't run and operate servers and we don't sell servers. We sell you space. And you, as a company, if you were QuickBooks, you'd come, you put all your QuickBooks servers in the data center and you manage them as an IT department, but we sell you the space to keep them up and running and connected to the internet. Um, every software application eventually ends up in a data center. Even if you're buying space from Amazon, Amazon servers sit in a data center somewhere connected to the internet, powered, cooled, fiber optic connectivity. You can think of it almost as self-storage for computer systems because in self-storage, the customer shows up, they put the stuff in their self-storage unit. The company that's running the self-storage company doesn't know what's in there, doesn't care what's in there. The same with us. We're not concerned about what kind of servers are inside the systems or how they run, or inside the racks, I should say. We just provide the space, storage, cooling. So with that explanation of data centers, they are all over the world. There are many, many data centers in every major city where, again, companies run their equipment that run essentially the internet. Here's what's going on in the data center space. Explosive growth. I could find 50 different charts with one Google search that shows the explosion of the global data center market, the explosion of the US data center market. We're mostly concerned with the global market. We are buying data centers and rolling them up into our portfolio from any jurisdiction around the world, primarily starting in Canada, but one of our first acquisitions is actually in Australia. What is driving the growth in the data center market? Heavily AI and just general computing needs. One quick anecdote that I've seen is that AI takes 10 times as much processing power as a traditional Google query. I could ask Google, uh, where should I vacation in Ireland? And it would give me back a bunch of responses, options for links to Ireland tourism, etc. Or I could ask AI, plan me a vacation in Ireland, and it would give me back a basic vacation plan. The difference is the AI query takes 10 times as much processing power because it's giving you a more detailed response. That 10 times as much processing power means 10 times as many servers on aggregate, quite literally, with people, millions of people doing this every, hour, minute, second. 10 times as many actual servers on the back end are needed to process an AI query. Remember, every server eventually lives in a data center. Power, cooling, connectivity to the internet, which means you need more and more data center space or more and more data centers and more revenue at a very larger scale to data center operators. So the market is growing extremely quickly. There's no expectation it is going to slow down anytime soon. So if you're investing in a business, first and foremost, you're looking at a company in a macro market that has strong, tremendous growth. The pie itself is getting bigger every single day, every single week, no matter what. And that's the space that we're in. Same thing written here, more in numerical format than graph format. You're seeing annual growth rates of like 11.5%, staggeringly big numbers on scale. The largest markets are in North America currently, but growing equally everywhere over the next decade at least. Our first data center is in Vancouver. This company is the combination of a CPC that I created, a capital pool company, where we took a company public with cash and went looking for the best possible opportunity for a public company. And we found the data center market looked extremely attractive, and we found a data center to buy in Vancouver. It was run by two entrepreneurs, one of which is John Arnett. He is now part of our management team. He's the CTO of our company. So as my capital pool company, or Shell as they call it, our qualifying transaction is with his data center that was called Carrier Connect Systems. We put the two together and we ended up with Carrier Connect Data Solutions, and we went public in February. This data center is right downtown in Vancouver, here in Canada, at the heart of the internet for all of Western Canada. It's our flagship data center. So we are running this business. It is connected to the core of the fiber optic hub, which is at Harbor Center in Vancouver. We have about 50 of these racks that we sell the space in to customers. Because it's in Vancouver, they're typically Vancouver-based or Canadian-based customers. 24-hour man security loading facilities to bring your gear in and out. It's a metro data center, so right in the city. Very low latency. In other words, if you're running critical applications that need high-speed responses on the internet for your customers, even think of something like algorithmic trading, something that requires, extra fast responses. Our data center is perfect for it because it's sitting right at the heart of the internet here in Western Canada. It is a small data center because it is in the metro space, but it was perfect to start our strategy of acquiring and rolling up data centers where we can get them for a good price and increase their value by making them part of a public portfolio, which I'll talk about in a minute. It's going to do about $500,000 in revenue this year, which, as you see in context of our market cap and where we are in our share structure, is a perfect asset to start with. I won't spend much time on this slide, but the reason people would buy from our data center, which is a smaller data center, is a lot of it has to do with pricing and personal service. There are very large data center companies, many, many billions of dollars, up to, $100 billion public companies. They have, massive, massive facilities, and they cannot provide the kind of pricing we have. They can't provide the kind of personal service we have. And we get a lot of customers that want to have work with smaller companies, smaller data centers, and get a great price like $1,500 a month for a rack versus $2,500 a month for the bigger centers. There's a space for everybody in the data center world. There's customers looking for different price points and different levels of service. So that's where we enter the market. What is the timeline of success for the company? So the basically 200 Burrard was acquired by Carrier back in 2022. In 2024, they signed the deal to go public with my CPC called Hopefield Ventures 2. We put them together, and in February, we listed on the TSXV. So we've been only listed for about 3 months. We're at the start of this journey, but the beauty is a lot of companies will go public. They have an idea, they have a plan, they have a PowerPoint deck, and they talk about what they are going to do. We've already done it. We have a data center. It's got 20, live customers in it, generating real revenue, real physical location, hard assets, and a real business. And with that, we're using that as the first location to go out and acquire more of these data centers. So through the course of the rest of this year, we want to acquire a second data center, a third data center, and the plan will be to buy somewhere around 4 or 5 of them, depending on what we can acquire on the smaller end of data centers. And then should have a market cap, in the $50 million range and use that to raise a larger chunk of capital. Could do a capital raise of, say, $10 million, $20 million. We'll see what it looks like. And then either joint venture with another company to build a greenfield data center, one from scratch, one built specifically for AI applications, or build our own. Go find an existing building or piece of land and build one for scratch. And that just allows us to scale and scale. It'll be harder to buy the bigger ones because the bigger data centers are owned by data center companies. They're not for sale. Smaller data centers are owned by entrepreneurs, a group of entrepreneurs, or another company that's not have doesn't have their core business in the data center business. And I'll talk about that in a second in that strategy of how we're going to roll these up and why they're for sale and who we're going to buy them from. So before I talk about the first acquisition that we have in line, I'll talk about the strategy. So there's two kinds of data centers out there that are perfect targets for our company. Number one is one owned by entrepreneurs. There's all sorts of smaller data centers, under 2 megawatts, we're going to say, that are owned by two, three, five entrepreneurs, a small business. They're generating great cash flows. They're great businesses, but they have no liquidity. They're private companies. And a 2 megawatt data center, for example, is still a lot of investment in a decent size. It would take $20 million to build. So a data center, like I've shown you, would take in the range of $10 million per megawatt at minimum to build from scratch. So think about, $0 to $20 million investment, but they have these people running these businesses have no liquidity. The large data center companies that are running things like 20 megawatt facilities won't buy them because they don't want that size. Basically, they don't want to deal with owning a whole bunch of smaller data centers. They're building mega data centers, hyperscaling data centers, as they call them. So they don't have an acquisition opportunity to sell to the bigger guys. And other private companies aren't buying them. But as for us, they're perfect. We can come along, we can buy them, we can put them into a public portfolio, and get a public market valuation for them, but we can pay them a private company valuation and they get liquidity, they get cash, they get stock, and they get an opportunity to cash in on their investment. So that's one group of owners. The other one is corporations that own data centers that are non-core assets. These are companies that own a data center, but they're not a data center company. Maybe they're a software company that has ended up with a data center, but primarily it's not their core asset. So it's not worth as much to them. They don't necessarily want to be in that space, or they don't want to be a pure data center operator. We can buy data centers for them that are maybe not part of their future plan. These data centers might not be in core downtown locations. There might be various reasons that they're not core to these companies, but we can buy them for lower valuations again than they are worth and their asset base is, to our public investors as a portfolio. So those are the two kind of owners that we're targeting. And the first data center that we have under LOI to add to our Vancouver location is in Australia. It's in Perth, Australia. This fits the bill perfectly. It's actually a 2 megawatt facility. So remember, it costs about $10 million to build a megawatt. If you were to build this today, it would cost over $20 million of build. It has 220 racks of space. These are the racks, so 4 times as big, more than 4 times as big as our Burrard, Vancouver data center, completely built out. All of the investment has been done by another company. The company that owns it now acquired it in an M&A transaction. Is something that just came along with a software company that they bought. It's not core to their business. And again, that gives us an opportunity to buy it because they don't really see it as part of their future of their actual company owning a data center. It's got 3 large diesel generators for backup, 3 industrial chillers, full UPS systems, battery backup. In the space that's there, there's $330,000 in monthly revenue potential. And again, it would cost $20 million to build. Our LOI has us buying it for $2.5 million with $300,000 cash up front and the rest on a vendor take back note. It is a tremendous opportunity. Our market cap, and I'll talk about it a little more in a second, is a $6 million market cap. We just went public. We're going to acquire an asset that has more than $6 million in equipment sitting in it if you were to just break it up and sell it today for $2.5 million with only $300,000 cash up front. because we're one of the few buyers that wants to buy data centers of this type because we're building a portfolio of these that in aggregate will be very valuable to a larger data center company, the guys with $1 billion plus market caps, if we were to sell someday, or we keep them and generate cash. Data centers typically throw off 40% EBITDA as running operations. Their customers never leave. They're incredibly sticky. IT teams put their gear in and they don't want to move it because they don't want the risk of downtime to their customers. They don't want the complexity. They don't want the risk. And data center customers come and stay for years and years and years. They're usually on somewhere between 3 or 5 year contracts. But it also doesn't typically matter because if you're providing service, in other words, power, cooling, fiber optic connectivity, it works. The companies don't leave. Um, Quickly on the team before we get to the market cap and the cap structure, which I said is very attractive, which it is. My background is I've led multiple public companies as CEO. I have founded this company as a CPC to particularly go look for the best possible market with the best opportunity to build shareholder value. The data center industry is absolutely ripe for that. So that's why we took this, my CPC, and founded a data center company and started building Carrier Connect for us and our shareholders. I've raised an enormous amount of money when I was across different jobs, including CEO of Big Digital Assets. We are a company I founded with 2 people and maxed it out. We hit $1 billion market cap at one point, went from 2 people to 100 people, multiple subsidiaries. I know how to build companies. I know how to scale companies. Not my first time. My relationships with the investment banking community, which is needed to raise money to do this kind of execution, is very strong. A lot of Canadian investment bankers are actually invested in this story because I went to them first. I have a very good relationship with the brokerage community, Canada, US, Europe, for people that are looking for these kind of investments. I have those relationships. So we're well set up from the start. John Arnett is our Chief Technology Officer. He is the guy who owned the data center at 200 Burrard. He's joined us as the Chief Technology Officer. He's grown, I guess, nine, it says, at least 9 different tech companies. He's forgotten more about data centers than I'll ever know. He has an amazing relationship in the data center community, which we're going to use to do acquisitions. He's been a Young Entrepreneur of the Year, won awards from BDC, and he has had tremendous success in the technology space. So we have a perfect partnership at the top on the business side and the tech side to go execute this. And on our board, we have Mitch Demeter. Sits on many technology different boards, including Bitcoin Well, Neptune Digital Assets. He's in the digital space. He's currently the company CEO of a company called SPETZ, SPTZ is the ticker in the Canadian markets. Tremendous relationships and a perfect guy to give us guidance building out this company along with Peter. Peter sits on a lot of different Canadian tech boards. He's a director at Victory Square Technologies, basically a Canadian incubator to help scale early stage technology companies. So his knowledge, connections, and relationships will be extremely valuable to us going forward. We also just announced Dan Barnholden as a capital markets advisor. He's not even on the slides yet. It's so new. He is the CEO of a company called Luca Mining that is an incredibly successful mining operation. But he's been there less than a year. And since before that, he was a director and managing director of multiple different investment banks throughout his entire career, raising capital for technology companies, mining companies. He was at Ventum. He was at Stifel. He was top guy, raised lots of money with me when he was on the banking side, and now he's here to help us execute that for our company at Carrier Connect. Here's the cap table. You will not see another cap table more attractive than this today, and maybe this month. We only have 11.269 million shares outstanding, and a tiny amount of stock options at different values, 15, 30, 38 cents. They're mostly held by myself and John. 67,000 warrants from the IPO way back of the CPC. Total dilution, only 12.3 million. But from actual outstanding, 11.2 million shares. 36% are owned by insiders. More than 4 million shares are owned by insiders. That's myself and John primarily from our CPC and data center investments. Over half of the shares are escrowed out 24 to 36 months because the CPC was mine. It was in my control. It didn't have a whole bunch of loose paper, cheap paper, House Street Hustle. It was a real CPC under the CPC program, so it couldn't have those. It wasn't a shell. It wasn't a dead mining company reinvented to take a company public. So 5.6 million are escrowed. There's only 4 million shares free trading. In fact, it's less than that because I own a bunch of the free trading shares and so does John. There's probably only 3.5 million free trading shares. We did a tiny financing when we first went public as part of it, just under 1.7 million shares. Those are held up under a 4-month hold until late summer. So the cap structure is very, very tight, well, well controlled. We know who owns the shares, where they're placed. We are planning to basically continue with our acquisitions that you have seen, roll those into the company. We will do capital raises to put some cash into the deals, hopefully a reasonable amount of stock into the acquisition deals. The one in Perth, as you saw, is no stock. It's a cash deal with a vendor take back, which is perfect. So basically, it's being financed by the seller and has no dilution to our capital structure for our company. The stock is at around 50 cents Canadian, 51 cents Canadian right now. That's again only a $6 million market cap. At $1 a share, we'll probably do a raise, and then at higher values, we'll do larger raises as we continue to acquire. If I started a company in my garage tomorrow, I always tell people with a PowerPoint deck, we'd probably go out and raise our first round of money at $5 million a share. That's how attractive the market cap and the investment is here. And again, we own a data center. We have revenue customers. The data center in Vancouver doesn't lose money. It's a cash flowing profitable asset that we acquired right out of the gate with the CPC. So we're in a tremendously good position. Our catalyst coming up, you're going to see announcements around data center acquisitions, top line revenue growth as we put the data centers in. We're going to get a US listing. We're going to start that process very shortly for DTC eligibility and get an OTCQB listing. I've done it multiple times before. Um, Data centers are very attractive and topical investment in the US right now. So we're looking forward to unlocking the US really investment value and going to a bunch of US conferences. I have tremendous relationships I've built over the years in the US with my previous company that we'll get to unlock for Carrier Connect. We're going to do some upgrades in our Burrard facility to unlock faster revenue growth in that space. There is still space there for significant growth to the upside without any materially large capital investments. Because once you build a data center, once you put in the cooling systems, you buy the generators, um, you don't have to make material investments. You have to continue to add raised floors and some racks, and then you can put in customers. And we're really going to start the investor outreach. This is actually the first presentation in Germany with our German listing. We're going to be doing a lot of shows and conferences like this in Canada, and then with our US listing, starting to get US exposure, increase interest in the story, investment in the story. And now is the time to invest in one of these stories because, again, capital structure is really good, really tight. We're at the start. We have an amazing market cap, low attractive market cap for what we have. It's not bloated. We didn't purposely go out with a big high price and then watch it fall, which happens all the time in new issues. We went out very conservative and slow, and we're building it up if you look at the 3-month chart from inception to here. So that is the end, and I'll take questions now. My contact information is on the screen. Market Carrier Connect DS is in datasolutions.com. And I'm going to leave it on the first screen here where there's the WKN ticker as well.
All right, Mark, thank you very much for the presentation. Very, very interesting. Obviously, big focus on your share structure and how you build up the company and went public. This was a very, very clear segment of your presentation. Maybe what is a little bit as a question, as a follow-up, is basically we all hear data center. We all know about it without knowing anything about us. So can you maybe take us to like a client journey of yours? How does it start? What are their needs? And how do they end up calling you rather than someone else?
Yeah, it's a great example. So think of a software company, right? There's a startup software company. I'm going to put it on the picture here. they start their company and they have two options really to run their software that they're going to build and sell to customers. One might be buy a couple of servers and put them in their office and have their software run on their own servers that they have in a closet and literally think of a commercial office space and maybe in the back they have a closet. They take a couple servers and they hook them up to the internet and they use those. That's one option. The other option is they go to Amazon and they buy space from Amazon using AWS and they run their software on AWS. Um, a lot of companies, they want to know where their data is stored. If you put it on Amazon, you don't know where they're running your software. It could be anywhere in the world. And if you want it run, if you're in Canada, Canada company, you might want it in Canada. But the price of running Amazon, there's a lot of conveniences, but it's expensive because Amazon is marking up very significantly, basically the server space and the application space they're selling to you. So a lot of startup companies will say, okay, you know what, we're gonna run our own servers either for price or for data sovereignty, as they call it, knowing where their data is. They have an IT team, they want to be able to manage their own servers physically. So it starts in their own office. And then they realize, uh-oh, what if the power goes off in here? That means all of our customers have no access to our software. Uh-oh, there's a lot of heat being created by these servers, and we have no way to cool them. And it's creating an issue and a hazard, frankly, from heating. Oh, and our office is out in the subdivision where we rented our data center space, or sorry, we rented our office space, and we actually noticed that our applications are running slow for our customers. We need to be closer to, fiber optic connectivity at the core. And what they realize is they actually need to get those servers out of their office and put them in a data center. So then they'll go looking for where they can actually put them in a data center where they get, high-speed connectivity. The cooling is provided. There's always power and backup power, and their customers will never go down. So as they start growing, they'll buy one rack of space from us and they'll move their servers there. And then as they get bigger and they need more servers because they're having a successful growth in their company, more customers, they'll buy a second rack and then they'll put more servers in there. And that's how they become a customer of ours. And they do shop around. And if they're a startup company, they'll go, well, we could pay more for a, giant hyperscaling data center that serves Amazon, but they have everything from biometric eyeball scanners and, bomb sniffing containment tubes when you walk in, and they'll say, we don't really need that. And we're paying for it. So they look for a value option. And that's what our services more often are so far is the value option. But that's the sort of the journey. And then what they happen to do is they usually leave their servers in the data center for, like we said, 10 years. They're very sticky. It works. And they can expand usually anytime they need to. They can go see their servers and change them out or service them because they have access to the data center 24/7. And they have their own locked rack in the data center. So that's what it looks like.
Okay. And do you see an opportunity with what's happening right now with trade war with the US around the world and so on to have actually a local Canadian solution? Now you're expanding to Australia, which could also act as a local Australian. What's your take on that versus your
Yeah,
business model right now?
100%. And I'm glad you mentioned it. So they call it data sovereignty. People are starting to think about with the, trade wars with the US and their relations with the US, whether they're in Canada or Australia or otherwise. And a lot of movement is to make sure you know where your data is and your servers are and you have access to them without crossing a border. And your data is, resident in your own country, so there can't be any sort of US control over it. So people are moving equipment out of the Amazon cloud, for example, because again, they don't know where their data is and they're putting it in data centers in Canada if they're a Canadian company. So they have that sovereignty. So that is absolutely a driver of our growth as well.
Okay, and maybe last question. If you're doing data in Canada and in Australia, how do you manage cross-border compliance and so on?
Yeah, our customers usually operate in one of those countries as opposed to both. So, they make sure that Canadian companies rent space in the Canadian data centers, and the Australian companies, they rent space in the data centers in Australia. So there's not an issue with cross-border compliance, regulatory issues like that. And international companies could put equipment in both, and then they'd have what they call disaster recovery
Yeah.
or redundancy. If there was an issue where the western part of Canada had a giant blackout, their servers would keep operating from the Australian market and serving customers globally still from there. So that's actually a reason that we have more value as we acquire more data centers and spread out jurisdictions because we can offer that service to our customers as well.
Perfect. Well, Mark, we are at the end of the time. It was extremely interesting. Great business model. Again, extremely great share structure. I think it's a great start for the company. I will be looking forward to continue following the story. Once again, from the IIF, thank you very much, Mark Binns, for being part of it. And I invite everyone to keep on following the story of Carrier Connect Data Solutions.
Thanks, Julian. Appreciate your time today.
Thank you very much, Mark.